who better than Sanjiv Bhasin then to celebrate this moment. Sanjiv, hi, morning. Good to have you on the show as always. And what a wow Monday it turned out to be. But a lot of FOMO feeling as well out there, right? People thought they were under participating in the move that one has seen, at least in the large caps. Give me 3 names, Sanjiv, where you can still buy.
Yeah, good morning, Aisha. Superb Monday and superb month. I mean, what a month. 1 month can make so much of a difference. And I remember 25th October was my birthday and I had called a lot of people on the 60th and everyone was, doom and gloom. I gave them stock tips and I told them new highs are here. Nobody believed. But, so is the grace of God that India is in an outperform market and the biggest fools now are the biggest buyers. So that frenzy will now continue. FIs underweight will turn into medium weight and then overweight. But the real, proxy to this bull run is the retail investor. Anybody who has a SIP is making money. And that undertone of SIPs going down under and all is all, hogwash. I think this is here to stay. Equity as an asset class will remain the preferred choice. We are an expensive market. We will remain. But that is what bull markets are all about. And you have to be there to make money and enjoy the party. So I'm of the opinion the party is on, but more going to be large caps. So we have taken chips of the mid caps. We are putting it into large caps. 3 names which I can suggest. Firstly would be HDFC Life. I think insurance is a no-brainer. These are stocks which are hitting new highs. Insurance and the gross monthly value of their increase in business, their penetration. HDFC Life now has the access to Exide Lives, which they took over and in smaller areas. And I think that with yields on the softer side, they are going to be having very, very good, treasury income and so on. So HDFC Life is my top pick. I think 750 was the previous high. We are going there. Second would be Godrej Property. Now, Godrej Property is a proxy to gold and stocks hitting all-time highs. I mean, it's been 35 years for me in the market. I have not seen when gold, stocks and Bitcoin hit 30,000. So it's telling me real estate is the best proxy for fixed assets. And who better than Godrej Property? I'm staying in DLF and in just closer to us, there is an area called the SPV, Special Economic Zone. He's launched a new product at 20,000 square foot. So you can imagine what he's looking at and where he's reaching. This is in Gurgaon. I am sure Godrej Property is going back to that 2,500 levels which it hit, maybe last year. Third would be L&T Technologies, LTTS. Their presence in defense and the other allied areas makes it a very, very good choice. This stock is hitting 50 to 100, and I would put these 3 pedigree names as in the serial of 1, 2, 3.
Right. Okay. Sanjiv, that's a fair point. But any pockets that you would say that, the rally's run its course, take some profits at least off the table?
Well, power. I don't want to chase power and I don't want to. We have made, by the grace of God, a lot of money and we want to preserve that. So I am more optimistic on the index, the bank Nifty, which has been a huge underperformer. And I'm very, very optimistic. Power is something I would take, lock, stock and barrel off. Leave the rest of the 10% or 15% for someone else to make money. You sit out on that and power your own portfolio with large caps.
You mean the financiers, and Sanjiv, just want to clarify, PFC, REC, IREDA types?
The whole basket, NTPC, PFC, REC, read my lips. You have to be leaving something on the table. Don't chase these at these values. There is a frenzy over there. Be cautious. But it is not that they cannot run up more. I am of the opinion that it is a lot fair, but a large part of the fair and the overbought positions are there. And they are riding a huge boom which was missing for the last 10 years. I am not in a position to say that when they will top out. But if you leave something on the table, Aisha, you will always be happier and you made money. And there are enough stocks on the large cap which are giving me comfort where I would be happier with a 12-14% return over the next few months. I don't want to chase 25% per month, but even lose some of my capital.
Interesting.
Meantime, I wanted to get in your take, Sanjeev. I don't know if you track, but within the footwear space, Metro Brands has seen a pretty strong rally of late. Their strategy of premiumization clearly has been working, whereas some of the other players within the space, say like a Bata or Relaxo, haven't quite been up to the mark. Does Metro stand out among the lot?
Yeah, good morning. Avan, firstly, just to clarify, I am also with Kunal on that. We own Tata Power and we will continue to stay with that. I meant the PSU side of the power basket. Just a clarification. Tata Power is one of our top bets. We think that their underperformance is now going to come out into as an outperformer. We have a target of 350 as a disclosure. This is in our portfolio. On Metro Brands, clearly, it is evident that the spending patterns, the type of frenzy you're seeing in Nykaa and Mama Earth and the so on, you'd rather buy an asset which is going to be more durable. And Metro Brands has been very, very key in outperforming. Their presence in a large part of the metros and now smaller cities is gaining traction. And I think this is a very good consumer play which you have on consumption. So the stock has been on a tear since a long time, but declines would be a good opportunity to get in. However, don't chase value at this time. Since I said large part of the large caps are giving you a lot of comfort to be over there, particularly the banks and some of the insurance companies.
Fair enough. And what about your outlook then on some of these recent listings? Honasa, for instance, Iradia, some of the more muted ones as well that we saw. I mean, given that we're just on this topic, do you believe that some of the valuations here are justified, or the attention or the kind of subscription figures that we've seen? What does the long-term story hold for a lot of these companies?
Look, Avan, 2-3 years back, they used to trade at 0.3, 0.4 time price to book. REC, PFC, and now Iradia gets a premium of almost 2 time price to book. Generally, historically, when PSU start to be 2 times price to book and they look the best bets, that is the time you should take money off the table. I am not chasing any of these. I think a large part of the rally is already built in. They've had a superb run. You enjoyed the party. Stay, try and look for other sectors which have enough valuation comfort. On your Mama Earth and others, now there is going to be the lock-in and you'll have some of the others who will want to sell out. Today also there is a particular deal. So we are avoiding this space. This is a very competitive space. We have to wait for 2-3 more quarters. Let some of the old hands try and get out of this, because there will always be this frenzy for others to get out. And that's what the key has been in some of these newly listed stocks which are private equity owned. There is an entry and an exit for a lot of investors. So I am saying go with the tried and tested. You will make you'll have at least more security at not missing the bull run by buying some of the nifty stocks rather than chase some of these new entrants which have already run up a lot. So caution on those side, but yes, fully bullish on the index and the index stocks.
Quite an interesting view there, Sanjeev. Always good to have you on the show. Thanks as always for taking the time out and joining in.